You're listening to Don't Waste Water.
If you had to choose one killer argument, it's really the energy efficiency that you get from being at depth. You have free, unlimited access to the pressurized seawater. So it's both naturally and predictably clean. It both lowers the cost and reduces the emission as a consequence.
Hello, bonjour, and welcome to the Don't Waste Water podcast.
If you look at the entire process, I think GWI has data on 3 or 3.1 kilowatt hour per cubic meter, which came out in their report in January 2024. And we are typically down to 1.9 to 2.1 kilowatt hours per cubic meter.
I'm your host, Antoine Walter, and in today's episode, I'm delighted to welcome Alexander Fuglsang as my guest.
Our target for this is definitely not to compete with the giga plants in the Middle East, where you have 500,000 to a million cubic meters per day production from a plant, where they have free access to land and so on. It's those areas which have more land scarce, remote coastal areas, or very expensive land.
Alexander is the founder and CEO of FLocean.
We don't have any sort of chemical or even grease in our ball bearings. We have water lubricated pumps. So if everything goes to pieces, there is still just water. We are not affected by storms, algae blooms, or jellyfish or anything. That's one of the things that make us climate resilient.
FLocean aims to deliver affordable freshwater to people, farmers and industries by harnessing the natural properties of deep ocean water through subsea desalination. Open secret, I'm an avid follower of growth stage investment rounds and trends. So expect me to update pretty early in 2025 my analysis of that scene and ecosystem, for instance by noting how 2024 is the first year on record where the total invested money broke the $1 billion mark, which is, I guess, a pretty encouraging signal for water tech overall. But today is not about that, but about a zoomed-in observation. In just a couple of weeks, a little cluster of adjacent companies raised pretty similar rounds of investment. First, of course, FLocean, which we'll discuss today with Alexander, raised a $9 million Series A led by Burnt Island Ventures to support their subsea desalination endeavors. But literally the same week, Oneka Technologies also raised a $4.25 million extension to the Series A to support their wave-powered desalination. Then, the week before, Madison Energy raised an $8.75 million seed round to sustain their osmotically powered desalination. And just days before that, Oceanwell raised an $11 million seed round to fund their subsea desalination endeavors. Coincidence? Maybe, probably, even as I don't see all these investors calling each other to synchronize their press releases. But if the timing is a coincidence, what it reveals about the investment thesis of these investors, and by extension about the opportunities they see in the market, is for sure not random. Water scarcity has been a number on a report for long. Now it starts to bite. And don't start thinking I'm obsessing over that concept, but if I had to cluster all these technologies in a broader bucket, I could simply qualify them as distributed water solutions, the exact type that requires to pour less capex and concrete in the ground and fully benefit instead of the great advances of the digital age to produce and manage more water for less budget. As we'll discuss with Alexander in a minute, FLocean and its peers have direct arguments to stand out in comparison to traditional onshore large-scale desalination. But opposing an emerging set of ideas to a highly commoditized category is a mistake these entrepreneurs don't do, so let's avoid doing it as well, right? Water scarcity has and will incredibly have an array of scales and shapes, and the toolbox hence needs to adapt. The fact that those technologies come with welcome side effects is more of a cherry on the cake. So this week, we'll explore how subsea desalination achieves 40 to 50% lower energy consumption and why depth is a game changer. We'll follow the company's fascinating journey from oil and gas, subsea pumps to rethinking water desalination technology. We'll break down FLocean's innovative modular system from its no chemicals and minimal environmental impact perked to its actual financials, and we'll discuss why islands and coastal regions with land scarcity are the perfect markets for this breakthrough technology. Now you know the drill. All of this and more starts right after I remind you that you get all of that knowledge week after week for free. All I'm asking in exchange is for you to help spreading the word by sharing this episode with a friend, a colleague, your boss or your team. Use it as a conversation starter at the water dispenser and I'll meet you on the other side. Hi Alexander, welcome to the show.
Great to be here.
I made a chronicle in the water show. At the time it still existed 3 years ago. I was listing the big step changes in desalination, making a top 3. And the number 1 in my top 3 was subsea desalination. At the time I was super hyped, and right now I'm still super hyped. But I'd like to start with the bang, which is, what is the number 1 reason why that is a killer? And from your website, I have 3 different options for that. The number 1 is 95% reduction in coastal land use. The number 2 is 60% reduction in pre-treatment infrastructure, because you're on the bottom of the sea. And the number 3 is 40 to 50% lower energy consumption. Is it one of those 3, or is it another one?
You're on the spot, actually. I mean, if you had to choose one killer argument, it's really the energy efficiency that you get from being at depth. You have free, unlimited access to the pressurized seawater. So it's both naturally and predictably clean. It both lowers the cost and reduces the emission as a consequence. We need electricity, and most of the power grids are still powered by fossil fuel sources, particularly in islands and remote regions. But I think I still need to highlight the fact that one of the beauties is that whether you ask for it or not, you actually get a free bonus. The lack of chemicals, no toxic brine, less land use, etc. And you're not affected by algal blooms or storms. This really drives the fact that we're more environmental and more economical. I know it's rational to ask for the killer app, but several water infrastructure projects with technology are not getting financed at all. I think solving multiple problems with one solution is actually pretty key to getting permitted and to the projects getting executed.
You mentioned more economical. Is that today, or is that aspirational once the scale effect kicks in?
I think even in the beginning, the fact that we are at depth where the conditions are predictable drives simplicity from day one. So you can have hundreds of fewer valves. You can have more compact system. You have less of the pre-treatment, which can be 40 or 60% of a plant onshore. Right off from the get-go, you get some benefits in the energy part, which is a huge part of OPEX of a desalination plant. You get benefits. The main benefits, I would say, is on the OPEX side, but at least in the beginning, because you're in the CAPEX, you have the marine infrastructure element.
Let me see if I get that one right, because I get the pre-treatment.
Yep.
Because you are at the bottom of the sea, which means you have much less biomass and algae and stuff like that. So you need less of the pre-filters than maybe not the ultrafiltration, which you would have before reverse osmosis. So all of that compounds in for less pre-treatment. That I get it. You get the free pressure from the ocean because you are at, what's your typical depth? 250, 500 meters?
So we say minimum 400 meters. We get some of the clean water benefits from 200 meters, but the cost economics really kick in a beneficial way when you're 400 meters or deeper. So when you get the pressure benefits.
So more than 400 meters means you have more than 40 bars of free pressure given by the ocean, which pushes on one end of the reverse osmosis. And then the environmental benefits are also that as you're not pumping so much seawater around, you can allow to have much lower recovery rates than traditional reverse osmosis. You can be concentrating up to only between brackets 20% when a typical RO must squeeze as much as they can out of what they've pumped. So all of that, I get it. Now, the part which I don't get is you get that desalinated water on the bottom of the sea at minus 400 meters. So now you need to pump that back on shore. Here, you will have to expand your 40 bars of pressure. How does that compound in?
You are absolutely right. In a conventional system, you push a lot of seawater, so your energy is spent upstream of the membrane to create high pressure on all the seawater. Whereas in our system, we are expending energy on the downstream side, only on the freshwater. We're pumping up to 50 bar with our subsea pump on the freshwater side. Also, quite a lot of processes on land on the pre-treatment side that you don't need, as you correctly pointed to. So once you've created your freshwater, it's about 3 to 4% lighter than seawater. So you get a boost, which compensates for some of the friction loss that you have to overcome in the piping towards the shore. When you look at all these benefits, what you created is a harvesting system for freshwater. The net effect, if you look at the entire process, is typically 30 to up to 50% combined with one of the state-of-the-art plants. If you look at the entire process, I think GWI has data on 3 or 3.1 kilowatt hour per cubic meter, which came out in their report in January 2024. And we are typically down to 1.9 to 2.1 kilowatt hours per cubic meter if you look at the entire process A to Z. But before you start looking at the air conditioning of the offices and the workshops and all that kind of stuff, where we're naturally, we get some benefit as well. We can dig even deeper into what's going on around the membrane if you want. When you have low recovery, like you pointed to, there is less transmembrane pressure to produce the same amount of volume. So if you have a membrane from, say, Toray or DuPont or LG Chem, and you're recovering with, say, 15 to 20%, like we are, typically the first membrane would see maybe 7 or 8% recovery, which is very low. There takes less transmembrane pressure to produce the same amount of water as if you're doing high recovery. That's quite an important aspect as well.
Is the membrane you're using something pretty standard, or did you have to custom design it?
No, we have designed the system so we can use a standard membrane. So typically, depending on what ocean we are in and what the qualities of the seawater are and what the qualities of the fresh water that we want to produce, if it's for drinking water or anything else, we'd like to be able to pick and choose, and we can definitely use standard membranes. And having said that, we are definitely paying attention to what the industry is creating, because there are some novel membrane applications and designs where we can get even bigger benefits than a conventional plant from these new technologies. But that's for the future, not in the near term.
I think I get a mental picture of your system. We'll go deeper into that, but now I'd like to get to the story of how you got to do that. The most recent event is that you raised $9 million roughly of Series A, which was led by Burntalent Ventures. And I always like when a round is led by Burntalent Ventures because I get a very specific feat, which is that they are writing a blog article titled Why We Invested in the super exciting company we just invested in. That blog article was written by Steve Close, who also joined your board. He writes, "You're a 5th generation member of the family behind Subsea." He also says you're smart, inspiring, charismatic. But what I'd like to understand is that Subsea, if I understood that right, is already a spin-off of your family office, which is Fuglsangs, and you lead the spin-off in 2013, and now FLocean is the new spin-off dating this year, 2013. What is the story of Subsea and what is your role in that?
We set up Subsea about 11 years ago now, I guess. We had this team of people who had been developing specialized pumping systems for the Norwegian Navy and for the industry and special process industry. And we had a love for these crazy applications where you had high pressure, high temperature, high corrosion, and everything is mixed in one pot. That was our playground. And then we saw a market for subsea pumping systems, more reliable and low cost. And then the business case was extracting more oil and gas from existing oil wells. Typically, oil wells offshore are abandoned when they are 50% full. Subsea pumps can increase recovery by 10, 20, 30% from a single well. That's an enormous payback and much more environmental than drilling for new wells or using gas injection to get oil up. But we saw that the existing subsea pump systems from the competition were the equivalent 100 times cost compared to the equivalent performing a topside pump system. So there was a huge price premium to subsea pumps, and there were very few players in the market. We ended up designing the world's first topsideless pump, so very autonomous subsea pump, and sealless pump. And seals represents about 70% of failures in pumps. And that took us on a journey to build and design a big family of pumps with the big oil operators, and also to delivering over 70 pump systems of various kinds for other markets as well. But that was the starting point to create a separate company for that niche.
So is it like you have those pumps on the bottom of the ocean, which you've been able to rug so that they don't fail where others would, and then you're like, yeah, but oil and gas, maybe we should find something else? And then what else? Desalination? Or how does the idea transition to add this level of FLocean?
What happened was opposite to our bet. The market would deconsolidate a bit because there were these gatekeepers, but the market ended up consolidating even more from 4 players to about 2 players in the world controlling the subsea systems market, each with their own subsea pump technology. Technip FMC and Schlumberger, or a company called One Subsea owned by Schlumberger. Even if we had a much better pump system, when you couple this to very conservative clients and we got COVID, oil prices went even negative for a little while. It meant our board and ourselves said, we need to be looking for another market for our subsea pumps. So that really started 3 years ago. We looked at aquaculture, offshore, subsea cooling using seawater, offshore seaweed farming and upwell. And then we ended up in desal. And one of the reasons is that we had a client called Seabox, which were doing subsea water treatment already. We had already trialed our pumps with them. We had been working alongside them for more than 24 months in the ocean to test the systems. So we knew that the subsea RO, it had something to it. We knew it worked. We knew the key component of a subsea desalination system was actually a subsea pump. Here we saw, number one, that we had a great technology fit, but we also started calling clients, particularly in the Middle East. And when we got deeper into the weeds, we saw that this market was huge. Then we really picked up the pace when the founder of Seabox, who was also the chief technology officer, said, if you want to do a pivot with me, let's do it together. Let's go and help the world with water scarcity using what we've learned from oil and gas. That's what we did.
So you took Seabox over, you merged with Seabox, you partnered with Seabox?
Good question. We developed our technology based on the learnings of Seabox. They had a great rationale for doing it in their particular way for oil and gas applications. Being in the water and subsea domain and learning about the different systems, we did it in a different way. So I think the experience and the learnings was important from Seabox, but no, we did it in our own different way.
I'd like to take a stop here just because the water guy in me is super happy with your path. You are digging for oil. You could have been pivoting towards, I don't know, white hydrogen, the lithium nodules on the bottom of the ocean, whatever would be super trendy right now in terms of replacement for oil and gas. But finally, the path which sounded the more appealing from a business perspective is water. So basically covers what I'm saying here for 250 episodes. So thanks a lot for that. But jokes aside, desalination is at the same time a market which is super appealing because there's a high growth, a lot need to be installed, deployed. On the other hand, you might be rushing in a new same situation than the one you had in oil and gas, which is that it's a highly commoditized sector where RO has become the gold standard for the past 20 years, where it's all about cost and there's a high conservatism because when you're putting so high capex for super huge projects, you probably don't want to reinvent the wheel. So how do you overcome that with your specific approach with subsea desalination? Is it by going at different projects than those super huge things you would see in GCC or Qatar or in the Middle East in general or in California? What's your way around from bumping the same kind of glass ceiling that you hit in oil and gas?
One of the main things is that we have been part of this ecosystem in Norway for ocean infrastructure and subsea. So the costs have really come down over the last few years, and which is crucial. So some of that, if 10, 15 years ago, this wouldn't be possible. That's an important thing, which is unlocking this, the explosion of ocean robotics and, having dealt with the marine infrastructure element where you normally would have a boat that traditionally would cost $400,000 a day. Now we're down to, 100s of that cost. So there's been some interesting cost curve explanations. And I think another dimension is our target for this is definitely not to compete with the giga plants in the Middle East where you have 500,000 to 1 million cubic meters per day production from a plant where they have free access to land and so on. It's those areas which have more land scarce, remote coastal areas, or very expensive land initially, where you have oceans which are more benign and accessible. And in the future, you could go to remote islands in the Pacific and the Atlantic Ocean. I think that's a great part of the market. Maybe we're not going to get the 95% cost reductions that solar has seen over the last 10 years, but we're definitely going to get big cost benefits. From what we know about the water infrastructure market, we are highly competitive on the capex when we do this in a smart way, using tools that we already know.
Let's discuss that market because you mentioned how you might be in the future going to these islands in the Atlantic or the Pacific. From your website, you listed like 95 countries where you would have possibilities today. The conditions must be that you need to have an ocean that's not too shallow so that you can go to those 400 meters of depth and not too far away. So I don't know how far would be too far. In terms of geographies, where does that take you first?
The first filter is having 400-meter water depth within 10 kilometers from shore. In oil and gas, we have been deploying subsea pumps in the industry for more than 100 kilometers from shore. So technically, we can go 10x the 10 kilometers. But because of the survey and because of the pipeline and the cable we need to put down, further than 10 kilometers in general makes the costs too high, or at least the profitability of a project is more marginalized. So I think that's the first filter. And the second filter is that we have identified pain points in terms of water scarcity and a group of clients or an actual client. And then you couple that with the geopolitical availability being the fourth filter. Yemen covers all the first filters I mentioned. Yemen might not be that easy to get into for us for various reasons of geopolitical situations. So you might not want to be going into an area where you have storms with 8-meter waves for a certain period of the year. You may want to start installing these in more benign areas and so on. But we can solve for any coastal conditions with our system and our design.
Why do you care about the storm? Is it only for installation? When we talk about these new waves of desalination, there are usually two technologies which come up. There's subsea, and then there's wave-powered. If you're wave-powered, I understand why on one end having the storm is good because that means more wave. On the other hand, too much is maybe at some point too much. If you're 400 meters under the surface of where the storm happens, what can happen to you? We are not affected by storms, algae blooms, or jellyfish or anything. That's one of the things that make us climate resilient. And that's really a word which is getting more popular. And no matter what you believe in, but you can see statistics saying that some of these weather patterns are getting more serious. So we are, by virtue of being on the deep ocean, we are less affected by surface conditions, rivers, storms, and so on. That's for sure. So when I talk about storms, it's more in terms of the installation period, that as any technology deployed in the ocean, on the surface or deep, you need to have a weather window. And, being from the North Sea, we've seen our share, and relatively speaking in the world, I think we're seeing some of the roughest conditions with the exception of the Southern Ocean up here. So that makes us pretty confident on that part. But we don't want to make it more complicated for us in the first couple of projects than necessary. So that's why Mediterranean, Red Sea, and those more benign areas are definitely interesting from the beginning, and even more economical, I would say. You mentioned being from the North Sea. There's an interesting pattern, which is that if we look at the companies active in those subsea and wave-powered type of desalination, it's a half-half. Half of the companies are from the US, half of the companies are from Norway. Maybe there's Oneka, which is from Canada. But outside of Oneka, which is the outlier, let's say, half Norway, US. Is it because you have a proximity with the other players? I mean, I said it on that microphone several times, so I'm going to say it one more time. If you walk alone, it's super dangerous. Like if you're alone opening a market, whether you're super clever and everybody else is super crazy, or it's the other way around, and you hope that you're the very clever lone ranger, but that very rarely happens. But from the theory of innovation, the magical number is 3. So if you have 3 companies doing the same, that are roughly the same or in same waters, then it's optimal. And it fits with your market conditions. So is it a pure coincidence, or are you talking, discussing, exchanging with those other players? I think it's of a huge importance that you're part of an ecosystem when you're a startup. When you're a kind of asset heavy or infrastructure type startup, it's even more important because it's more costly to iterate, more costly to fail. But I think the ecosystem, it's not just a cliche, and the ecosystem for ocean infrastructure is incredibly powerful in Norway. I'm sure it's great in Canada as well. I lived there for 4 years, but I can mostly speak for Norway. In terms of engineering, robotics, ship owner doing subsea installations, interventions. We are, the combination of Norway is the largest exporter globally of subsea technology. We also have clients here who dare to be a first mover. So having kind of partnerships where you demonstrate technology, where you have the whole value chain in the partnership, is a model that was started in the early 90s here and kind of formalized. So that's been very successful and helpful. We are definitely cheering for other competitors. I agree with you that the fact that you have few companies doing the same thing is actually helpful. Even bonus points if you do the same thing, but slightly better. Yeah, I think we are different on many axes, that's for sure. It's healthy. It's a sign for the rest of the market that it's really happening. You mentioned first mover. I think that's a smooth transition to your first reference wasn't in Norway with those first movers. It was in the Red Sea. So tell me the story of that one. I think the first commercial reference was actually helping Seabox get their stamp of approval and having a client use their system several years ago. That's what we called our first commercial reference. Having the filters next to our subsea pumps is something we always do with subsea. But in the Red Sea, we sold a small demonstrator unit to a very large client. They contacted us. We initially developed a very specialized, powerful digital twin. That's usually how we start subsea project, is in the virtual space. So we built a powerful subsea RO digital twin system, and we sold a tailored
version of that for their application. We delivered a demonstration unit that both harvested freshwater and could also sample the seawater, which is an important parameter. You want to look at the qualities over time of the seawater as well. So it had a dual function. Our agreement with that client in the Red Sea was very commercial, but it's not at commercial scale yet in the Red Sea. It's really high priority to get a commercial unit into the Red Sea. So we're talking to several prospects and clients across a couple of different countries there.
You mentioned the digital twin being the beginning. What do you need in terms of data to build that digital twin in the first place?
The more real data you have, the better. So the data we start with is data on the input side, all the environmental data and the conditions you are expecting in the project, the seawater characteristics, salinity, temperature, and so on, and some biological and chemistry from the water. And then we apply either data to the model from manufacturers of components, or preferably once we deploy systems, we exchange that data on the process equipment by the real data. For instance, in the early days, we were just tapping into the databases of the membrane manufacturers and the filter manufacturers. But then once we do our own testing, we have about 5 different jigs in our workshop. We replace that with real data from workshop or our subsea pit, or data from the oceanic environment. From that, you get the outputs, and then you can display that with a graphical user interface from somebody like Unity, where you can walk around in the rendered environment with the digital gauges, and you can start and stop it, and you can add layers of functionality, so that if you're a business person or a process operator, you can dive in and understand what's going on. So it's pretty powerful depending on where you take it and what your objectives are for the model.
One thing which came up in my research is the permitting aspect of things. From my muggle, uninformed perspective, I would think that a digital twin is a first start, and then the second start would be the permitting. And the comments I read were roughly, those subsea guys, as long as they are dropping a module on the bottom of the oceans, we basically let them do, and the permitting is pretty easy. But the day they want to get commercial and have, like in your configuration, 8 modules or a full farm, then maybe that permitting premium for the fast movers will vanish, and we might be much more cautious, because that might mean the vessels on the surface might need to be careful because something is happening in the deep sea. How concerning is that permitting topic today and in the future?
This was a big question mark initially. I think we're more comfortable now. One of the key starting points is that everyone understands that everything has an impact. So it gets into a relative discussion of your system versus a conventional plant. Before you get into that permitting discussion, you need to know your system and its impact. Anything from noise and just the fact that, for instance, we don't have any sort of chemical or even grease in our ball bearings. We have a water lubricated pump. So if everything goes to pieces, there is still just water. But you need to understand the actual impact of your system, at least from a relative point of view. Once you get into the details, and we created a set of documents early on to get across the table easily in the permitting discussions, all the environmental aspects, the recovery, what happens to the concentrate and the power consumption and everything, both on a whole life cycle basis. That really gets the parties and the stakeholders involved in the permitting positive from the start. And then we need to couple that with being at minister level. So in order to engage in the permitting discussion in a country, it's really helpful that you have some buy-in at a high level, so you can do these conversations across different departments, different ministries, because we're crossing at least 2 or 3 different ministries in every permitting discussion. The ocean ministry or the marine, the finance ministry sometimes actually own the seabed, and the Ministry of Environment, Ministry of Water and Irrigation. Unless you're connected at the highest level, it becomes a complicated, lengthy discussion. If you're early on at the high level, that really helps. We're not that worried about it. However, there are local differences, and that's one of the reasons why California, for instance, is a huge challenge, is that they are not allowing open water intakes for seawater. And permitting historically has taken up to 10 and 16 years of desalination. So you have to be a bit careful with where you focus.
The reason why I'm bringing up permitting as well is because from, of course, Steve's biased blog post where he's saying why you're the killer, he's highlighting something which, after all, is right. You are pouring a lot of money in a desalination project, in a conventional desalination project, in permitting, authorizing, and doing all the pre-studies. He says it's 90%, 10%. Like 90% goes into permitting, studies, engineering, conceiving of the plants, and actually 10% of the desalination capex goes into building the plant, which When you read that, sounds up in the air, and then you think of that infamous plant in California who got developed for 20 years and then not built, and you think, okay, that really happened. So would that mean that you would primarily go at places where the permitting process is incredibly complex? Because even if it's harder for you as well, you still have that edge over the others, that you have those benefits to say, hey, after all, we have 20% concentrated brines. Our water pumps, if they break together, well, you have some pieces of junk metal on the bottom of the ocean, but that's not so much of a big deal. So would that be your primary target, or is it really the obvious that you have to go to Middle East?
I think we take a holistic view on how we do this. We don't want to spend too much on permitting or discussions if we think it's a probability of us not ending up anywhere. So I think it's really trying to have meaningful discussions with the stakeholders and understand the regulatory framework early on. I think that's key. Usually there are pain points, and maybe there's sensitive ecosystems that we have to take extra caution with, where we are extra competitive compared to traditional desal for certain regions in the northern Red Sea, where you have corals that are, a world heritage. Then you want to make sure you're extra careful with your brine discharge, for instance. There's definitely aspects of it. And we want to make sure that the permitting and the early project development phase, which can be a large part of that, has to be covered by us. We have to be careful spending our money in the wrong places. So and doing the marine surveys and everything to understand that we're not putting the pipeline on the nest of an octopus are some of the interesting discussions that come up. But it's easily managed by technology, and then we go from there. Sometimes we may get some support on that phase of the project development, but the objective is to have competitive water. So our business model is to sell water per cubic meter. Having a low cost of water means we have to do the whole life cycle of a project development in a smart way.
Your business model is to sell water, so you become like a decentralized utility. That means you are covering yourself for the capex of installing and for the maintenance of all of that. That makes what you just said about going for projects which have a good chance to be permitted to be a key criterion, because you can't afford to just develop something which doesn't end anywhere. Was that business model like a given? You have to go for that. And was it never an intention to go capex, or really it's because you have bigger goals and that feeds the bigger goals?
In the beginning, we were open, humble, and curious, and we got different signals. But what we've seen now is pretty much unequivocally that because there's domain knowledge needed to design, install, operate, and maintain these systems, the only real way to do this is in the build-operate model, where we do it as collaboratively as possible with our clients. So we can train and involve clients, which could be a municipality, for instance, in the operational aspect. There's some conventional onshore maintenance that needs to take place, etc. So we want to do this together with our clients. They don't have domain knowledge to do this themselves. So without exception right now, it's a build on operate model.
Can I ask you for some napkin calculations? What would be the cost for you of deploying a project, to give an order of magnitude, and what is the return on investment time that you are calculating on?
So typically our projects, and this is some of the beauty of the project, is that we have to understand the cost and economics, is that we have a modular technology. It's designed so that we have standardized pods, each are 5,000 cubic per day, and we can scale them up to 10 pods. So that means 50,000 cubic per day. So we can really scale with the trust and demand of the clients. And these pods are designed the same if they're in the Mediterranean, or if they're in the Red Sea, or if they're in the Atlantic Ocean. It's some swaps of filters and membranes, but 99% is the same. That really helps. When we are talking about the smallest system, 5,000 cubic to 10,000 cubic per day, 5 to 10 MLD, we're looking at a capex of typically 20 to 30 million euro. It depends on the distance from shore. It depends on a lot of different aspects, but that's typically the target area initially. And then, the economics become much better when you're into the larger systems, but in the bigger range, it's more like 50 or 60 million euro or dollars for a 50 MLD system. But it depends on where you are.
Super strong scale economics, because you get to 10 times larger and you still only pay twice the cost, because you can mutualize a lot of the lines, and then it's just adding more.
Exactly. And we are working hard to improve the economics of the smaller systems. We have clever things going to be announced on that. You're absolutely right. The cost of capital becomes important in what we can offer in terms of the levelized cost of water. How you finance this becomes important as well.
Already the 30 million for 5,000 cubic per day doesn't sound egregious in terms of costs, assuming that you have a lifetime which goes beyond 3 years.
Yeah, and
Just doing napkin calculations here.
you're absolutely right. And when you compare, you have to think about a couple of things. One is that we typically put in redundancy. So what you have down there is twice as large system. So we usually have an extra pod down there for redundancy. We also have each pod have 30 to 40% excess capacity. So we have several layers of redundancy, and also by the fact that we are climate resilient and more geophysically protected, it can become more resilient. So uptime is a huge issue on pricing, and we can offer availability closer to 98, 99%, whereas a typical desal plant can be shut down for a couple of weeks or more just from a single weather event.
98, 99% availability, that's really good. So the obvious elephant in the room is maintenance. If your desalination shuts down, you call the local plumber, he untightens a couple of flanges, replaces some filters, tightens the flanges again, goes out, and that's it. Whereas if anything happens, you need to have a boat available in that area and have the right people, the right equipment to go down that 400 meters. What sounds complicated for me is probably not for Subsea, but how much of a challenge is it?
So it's really just leveraging stuff we've done for decades. The actual setting stuff, putting stuff on the seabed, pulling it up. So what we call marine or subsea intervention is very commonplace. It's very simple. And when you're in the coastal range, you can use bar. You would hook on the power and the flow lines very easily. All that stuff is simple. But you're right that the maintenance aspect as a whole is important, and it ties to the way you design the system. That the fact that you designed away from single points of failure and have redundancy and an operating philosophy that makes sense. So that's kind of the basics. And one of the beauties that is helping us have long mean time between intervention. In oil and gas, we were used to up to 5 years between pulling a subsea module with a pump in it. We have been proving ourselves in for a while. The fact that we have low recovery really for the desal process here, the RO really helps, because low recovery means you have virtually no scaling element, and that's a typical failure mode of a system. Low recovery also means you have very low biofouling. You are flushing more water through the membrane as opposed to pushing it through the pores of the membrane. So that really helps as well. But you need to pull the pods with some interval, and that's some of the data modeling we're doing, is predicting that based on real data. And we do 24/7 testing now on big volumes of deep sea water to improve our data models. That helps drive the economics. And even with pulling a pod every year, you have good economics compared to conventional desal. It's really interesting just having the nature-based solution working with you on that.
Your typical maintenance period would be 5 years, but even if you had to do it every year, you would still be in a good position compared to traditionals. I get you right.
Realistically, we may be somewhere between 1 and 5 on the first couple of operating cycles, but we estimate 3 years, and we're down to 2.5 years. That may kill 1 or 2% on the IRR. That's what the models look like. So it's not killing the project. Typically, we are looking at internal rate of returns unlevered of, say, 15 to 20% in a project. And then when you have a 20 to 25 year contract, that's still pretty attractive for infrastructure investors that are typically looking for 10 or 12%.
So over a 25-year contract, you would budget to replace the modules, or is it really the same modules will last the 25 years because you do some regular maintenance?
The design life is typically 30 years of the infrastructure, and some of the pipeline elements and cables come with 50 to 100-year warranties. But 30 years is typical, and 25 to 30 years is what we've used to from the oil and gas sector.
For the equipment, I get it. The pipes, of course, but I'm biased. I would say that 100 years is easy. But for the membrane itself inside, or is it one of these things which you would simply replace as part of the maintenance?
That's being replaced as part of maintenance. Okay. We have some clever functionality in the pods to extend the life of the membranes, but eventually we need to put them ashore, and then a certain percentage needs to be replaced. We're not building as big of a mountains of used membranes as typical kind of high recovery systems on land. So we use our membranes for longer, but they need to be cleaned and replaced eventually.
We discussed a bit of the economics. You have projects of the size of 30 million. I understand that's project money. It's not exactly the same money, but you're raising 9 million. What are you raising the 9 million on? What is the rationale, and what do you intend to do with those $9 million or 100 million Norwegian crowns?
The money we're raising is to kick up the pace, and about a third of it is to build a large-scale demonstrator in support with other partners. About a third is for project development, particularly in the 4 or 5 regions where we have signed MOUs. We have minister level support from 3 specific locations. Jordan and Maldives are 2 of them. The third one is for more organizational development, building the team, getting the right people in place. And then we're likely to be, looking for a Series B down the line so that we can actually scale up the project. Some of that will be towards equity in the projects, and some would be another equity in the FLocean AS, which is our top holding company in Norway.
I'm super interested in the one you just mentioned, the Maldives one, because I would see two buckets. One bucket is the coastal big cities, which are next to an ocean with that level of depth. So you have the Red Sea, you have probably South Africa, you have probably Australia, you have probably California. Basically, and I just open and close that same parenthesis, it's all the places where they have had at some point a project of towing an iceberg. To tow an iceberg, as silly as it sounds, you need roughly the same conditions, like a water stress place which is ready to pay a premium for a crazy project, and enough depth on the sea so that you can tow the iceberg up to the shore. Nobody did it, so I guess it's a good thing that now they can switch to something which is less crazy, which is subsea desalination. Maldives is something different. Maldives taps into those 15,000 islands, more or less, which are in water-stressed area by definition, and which on top of it don't have the luxury of availability of energy and supplies and chemicals and everything. And so you sound to be ticking a lot of the boxes for those places. So I would believe that, yes, Red Sea is cool. Yes, whatever you could do in California or wherever it is sounds cool, but that seems to be your crowd. If you can do something for the Maldives of these words, then you have something which is such a sexy business model that just repeats from island to island all around the world. What's the story of the Maldives?
Yeah, no, you're right. Maldives hits the heart, obviously, because you're doing good, and it hits the head because it's logical. They have a sensitive ecosystem, and they are losing land area every month a little bit, and they have to reclaim land. Particularly two of these islands, they have half of the population, which is about 250,000, staying in two very crowded islands. You're definitely solving a real problem. It's one of our target markets is the Maldives and islands like that. The challenge in some of these islands as a first kind of beachhead into the market is the fact that they have a challenge economically to get involved. They don't have a lot of infrastructure to help set up and support the vessels that you need to install it and so on. We need to develop the projects a lot on our own risk and cost in the beginning. There's not a lot of finance available for technologies at our stage, and the fact that it's a large blue ocean market literally for our technology doesn't mean there's climate funds or infrastructure funds ready to invest. Our current strategy is to continue to develop the project in the Maldives and some similar islands that we're working on. At the moment, logically, it seems we need to prove the system at scale closer to home before we will be able to get funding to do the Maldives. It's a bit sad, but it's ideally we would drop everything and go to the Maldives, everyone, and help out. But there's also some political challenges in some of these islands. We have had great meetings and support all the way to the top in the Maldives. Hopefully we can get on with it and work with all the island states that need similar solutions.
Where will you roll out your demonstrator? Do you already know that?
So we are looking at a couple of different cases. We already have part of the finance, and we will know within a short period if we have the full finance to build a large-scale demonstrator on the west coast of Norway. It sounds weird, but there's actually a municipality on the west coast which is running short on water because of industrial water needs for fresh water. It will be in a very rugged area, so it will prove a lot of the points that we're making. We also have simultaneous discussions in the Red Sea to do a large scale as well, and both of them have commercial potential. So they're in the 1,000 to 1,500 cubic meter per day size, but using the modules of the full-scale system, having the fully integrated system and business model. We're developing projects commercially because some countries are not demanding us to do any more piloting, since that's what we've been doing. We've been doing so many subsea pump projects over the last few years, but we're still expecting some of the investors and clients to be looking to be number two. It's really a race to be number two in this market. So it's going to be helping us to scale faster to do a big demo.
Everybody wants to be first to be second. That's the plague of the water sector in all its shades and fashions. But
I thought the oil and gas was conservative, but water is as conservative for sure.
Yeah, there's a common trait here.
Yeah.
If we were to discuss again in December 2025, what would you have achieved over the 12 months?
So over the 12 months, I think we've been successful in signing term sheets and joint development agreements, which is the step where you have some reciprocal responsibilities with some of your clients. We are in the process of installing our demo physically in the ocean. So we can switch on first water in the early part of 2026 for these large-scale demos, which hopefully can be commercial. We built an even stronger team. We love to hire internally for some of the senior positions, but we're also looking for people in the sort of a mega project, marine project manager type of people, as well as supply chain people. So we've hopefully hired some of those.
How many people are you today?
In FLocean, we're about 20 people. We all similar size as Skunkworks were back in the 60s when they built some of the most amazing airplanes. We hire people and we have great partners like Siemens Energy and others who have people helping us on a daily basis.
What does success look like for you in 2030?
2030, we'll probably have a fleet or farms, hopefully more than 5 operational subsea desalination systems across a couple of different markets, including islands. We have a serious and measurable reduction in water scarcity from some of these coastal communities that we've been able to contribute with. And yeah, in general, a track record of delivering water both in a profitable way, because I think that's a key way to scale, and in a sustainable way.
You just mentioned profitability, but is your target to be profitable from project number 1, or do you allow yourself to be building some experience and scale and then for the next ones to be profitable?
I think even for project 1, the first commercial project, we want that project to be profitable. I think that's really key to have profitable projects. It's not going to be the most profitable project. I think we're going to be seeing experience and learning curve effects. But I think we need to show profitability all from the first project, not including the large demo. We will be looking for growing into different markets, but profitability is key to scale up and to impact.
I find the field really fascinating. So I guess we will have to check again on your path when you have those. Let's not wait for the 5, but at least 1 or 2 commercial references under your belt. If that's fun for you, for today, I'd like to switch to the rapid fire questions.
It's time for the rapid fire questions.
What is the toughest challenge in your opinion for a water tech startup?
Complexity in structuring projects.
What would be your best single piece of advice for the founders and managers of the about 1,000 early stage water startups?
So I'm speaking as a large scale kind of hardware startup. So it's expensive to fail and iterate, which is popular in software. So I'm a fan of spending more time in the planning phase. So think slow, act fast.
That's a good one, and the distinction makes a lot of sense. I mean, there's a few hardware companies and they have to behave differently from the other ones. What's the drop of knowledge you wish more investors knew about the water sector?
It's the amazing gap, I think, between this huge deficit in drinking quality water, disappearing groundwater, and the funding going into the water technology. That gap is amazing. There are amazing opportunities to get it right with the right technology, the right business model, and the right team.
What was your most unexpected partnership and what did it bring you?
Siemens Energy. So they were our supplier for years in oil and gas, power and electronics, but now they're generating leads for us in the Middle East because they're a power supplier to desal plants in the Middle East.
Profitability or growth?
So growth, but with a clear path to profitability, I should say.
What's the next profile you'll hire?
Country managers, offshore mega project type project manager.
Let's be specific on that one because that person might be listening to this right now. When you have this target in Red Sea and this target in Norway, I guess Norway you don't need a country manager right now, but Red Sea you would probably need someone. So that's where you would be hiring.
Exactly, Middle East, and we have some of the Mediterranean countries in Europe where we're looking for that as well.
So if that's you, reach out to Alexander. I'm pretty sure he's open for great profiles. When you hire, are you looking for sector experience or startup experience?
So sector experience for a project manager, startup experience for most others. You can learn the sector, but it's really hard to learn adaptability and be a doer if you're in a too big, large company.
You answered that one as well, but I'm still going to raise it. Opening new markets or doubling down on the current ones?
Doubling down on coastal and island markets first.
What is that tool that nobody speaks about, but you couldn't live without?
It's our in-house subsea test pit. So we have 11,000 volt, 3 megawatt, 5 gigs, 30 seconds from our PC to our playground test pit.
That is so cool. So it looks like that one glitched in the recording, so here we go again. What is the single piece of insight your ideal customer profile needs to hear right now?
So subsea reverse osmosis works. It's proven from oil and gas in a much tougher environment. But then there's no premium for having environmentally friendly and a resilient system.
By the way, I'm opening a parenthesis here. Does it support you or deserve you that it's so sexy as a technology? I mean, there's not many water technologies which have like videos from the World Economic Forum or articles from mainstream press looking into it and say, hey, that is so cool. And I could see that on the one hand as helping you to break the ice, but on the other hand as like, yeah, one of those super cool kids that in fact doesn't fly.
Yeah, you're right. It really opens doors. However, once you get into the weeds, you understand how mysterious people think this is and how people start to overcomplicate things. So we attract quite a lot of noise as opposed to signal. So we have to navigate through the noise to get beyond the door opening. I would say it's a bit of both.
What are you desperately needing and want to raise an open call for right now?
For my Christmas wish list, or for next year, having some kind of guarantee instrument to trigger first projects. When we sit down with engineering companies and third parties like DNV, who approves subsea technology as kind of the biggest in the world, they all understand it, and they understand that it's simpler and we've done it before and the technology principle works. But still, clients and investors see technical and commercial risks. And you have all these export credit agencies, technical insurance, but there's still a gap. You have philanthropy, they want to help, they don't really understand how, and you have all these fancy advisors who gets really creative. But really, if we had a guarantee, a holistic guarantee, a company structure or an instrument gluing this together and giving incentives to the first partner, we could really scale up and use normal finance. And because finance is a big part of the business model to get these assets into the water, that would be the biggest wish. And people can make money from investing in some of these guarantees. So that would really help us to get to scale faster and get in the water faster.
Interesting aspect of the product development, which is sometimes overlooked. Thanks for the precision. What can and should I do for you?
First thing that comes to mind, keep on doing what you're doing. You're adding energy, you're adding humor, you're adding exciting twists to the stories. Just do more of it and that will be great.
That's within my reach. I'm thankful. Thanks a lot, Alexander. It's been a pleasure and I really stand my point. I'd be really interested to have a follow-on once you have 1-2 projects under your belt so that we can look at what's the way forward, because it could be a step change in something as mature as desalination and as much needed to bring that balance in terms of water availability worldwide. Looking forward to it. Thanks a lot. Talk to you soon.
Thank you.
Thanks for listening to Don't Waste Water. This podcast was brought to you by GF Piping Systems. Loved this episode? Head over to Apple Podcasts to subscribe, rate, and leave a review. See you next time.